Billions of dollars disappeared from investor accounts this week. This wasn't a glitch, it was a reaction to the new 100% tariff threat. Trump's trade policy has shifted from announcement to market reaction, and it is reducing the average person's balance sheet in real time. We are breaking down why markets are sliding, why purchasing power is weakening, and what strategies can help protect your finances. We track the money so you can safeguard yours. Today, we are discussing the wealth shock affecting American families right now. We are in a volatile financial environment. To stay informed about strategies to navigate this period, subscribe and turn on notifications. Let's analyze the impact. Part 1. The liquidation event. What just happened? First, let's define liquidation. In finance, this happens when asset values drop quickly, leading investors to sell either to cover losses or to move into cash. The data. Following President Trump's announcement this week threatening a 100% tariff on the BRICS nations, Brazil, Russia, India, China, South Africa, if they undermine the dollar, markets reacted sharply. Crypto crash. We saw over $1 to $1.5 billion liquidated from the crypto markets in the first week of December 2025. This wasn't just large investors. Many everyday traders saw positions closed because of high leverage. Stock volatility. The S&P 500 and auto sectors experienced a sharp sell-off. Why? Because a 100% tariff on these nations functions like a trade embargo. It restricts the flow of goods. Markets are pricing in recession risks, and when that happens, household portfolios feel the pressure. Part 2. The silent liquidation. Your purchasing power. The second way people are losing money is less visible but equally damaging. Purchasing power liquidation. Tariffs as a tax. Tariffs are essentially a tax on imports. When a 25% tariff is announced on Mexico or Canada, our largest trading partners, it means higher prices on cars, produce, and energy. The balance sheet impact. The $2,400 loss. Economists estimate that the new tariff schedule could cost the average American household over $2,400 this year. How it liquidates you? If you have $10,000 in savings, but inflation rises by 4% due to tariffs, your real savings drop to $9,600. You didn't spend the money, the policy reduced its value. This is how the middle class gradually loses purchasing power. Part 3. The global counterpunch, Japan's zero-tax move. While the U.S. is raising costs through tariffs, other countries are cutting taxes to offset trade war impacts. This week, all eyes are on Japan. The news. To protect its auto industry from U.S. tariffs, Japan is considering a 2-year freeze on auto environmental taxes. What it means. Japan is creating a zero-tax environment for car buyers domestically to stimulate demand. If exports to the U.S. are blocked, they need domestic buyers. The 1.03 million yen wall. Japan is debating raising the tax-free income threshold, expanding the zero-tax bracket for millions of low-income workers. The economic contrast. The U.S. is becoming protectionist and more expensive, tariffs, while Japan is becoming stimulative and cheaper, tax cuts. For investors, this creates currency volatility between the dollar and the yen, destabilizing global markets. Part 4. The trap assets, where people are losing money. Not all assets are safe in a trade war. The biggest losses right now are in sectors dependent on global supply chains. The auto sector trap. The news. Trump's threat to revisit the USMCA-CUSMA trade deal caused Ford, GM, and Stellantis stocks to drop. The risk if you hold these stocks in your 401k or individual account is you are exposed. These companies cannot build cars profitably without parts from Mexico and Canada. A 25% tariff wipes out their profit margins. Investors are exiting and portfolios are declining. The tech hardware trap. Companies like Apple and Nvidia are caught in the crossfire of the China 60% or BRICS 100% threats. Heavy exposure to tech hardware stocks means holding assets directly impacted by tariff risks. We're painting a tough picture, but awareness is key to avoiding risks. If you value this straightforward, risk-focused analysis, please hit the like button. It helps us reach more people who want to protect their portfolios. Part 5. The cash trap and safe havens. So where do you go? In a liquidation event, the instinct is to move to cash. But in a tariff-driven crisis, cash has limits. The paradox. Positive. The US dollar often strengthens globally during trade wars as a safe haven. Negative. Domestically, dollars buy less because tariffs raise consumer prices. The protection strategy: gold and commodities. Historically, investors turn to gold when trade wars threaten currency stability. Domestic manufacturing ETFs. Small-cap ETFs focusing on US-based companies benefit from tariffs since foreign competitors become more expensive. These are resilient assets in this environment. Part 6. How to stop the bleeding. Your action plan. You can't control the White House, but you can control your household finances. Here's a 3-step defense plan. Stop leveraged trading. If you're trading crypto or stocks on margin, pause. Volatility is high. A single tariff announcement can trigger a flash crash. Front-run inflation. If you need a big-ticket import item in the next 6 months, consider buying now. Prices may rise 20 to 25% after tariffs fully take effect. Diversify out of tariff targets. Review your portfolio. If you're heavily invested in companies importing most of their goods, rebalance into healthcare, utilities, or domestic defense stocks, sectors less affected by border taxes. The 2025 tariff war is not just political theater, it is a financial event with real consequences. Market volatility is forcing leveraged traders out of positions. Inflation is reducing the value of savings. Auto and tech stocks are under pressure. Domestic assets may offer safer ground. Stay focused on protecting purchasing power, avoiding unnecessary debt, and keeping liquidity. I'd love to hear from you. Have you adjusted your investments, like moving into gold or reducing tech exposure because of tariff news? Are you concerned about job security if trade wars escalate? Drop your answers in the comments and subscribe for more educational content on personal finance. Thanks for watching.